The second type of audit is a human audit. A human audit is where some auditor, they call themselves revenue agents, is given your particular tax return to examine. Now, a human audit is focused on certain topics. They've already had some pre-analysis, and another group, a compliance campaign, has determined that your tax return needs to be investigated in a particular area. So I say that because a lot of people think that the auditors are going to just dig into their life and turn everything upside down. Now, it may feel that way, but they're not. They're pretty much focused on, if they say check the business expenses, check the crypto, that's what they're going to do. They're not going to be focused on a lot of other things unless if something comes out. Now, auditors are measured inside their team by how much revenue, which is taxes, penalties, and interest, they can bring in on a monthly basis. So they are ranked on this. They're not your friends. They are motivated to hit you with as big a number as possible that they can justify. That's not the end of the story. You can always appeal it. But that's what an auditor is about. When they see crypto trader, they smell money and they go after it. All right. So that's just understand the mindset there. Whenever you're involved in a human audit, this audit is going to take at least 1.5 years because the IRS is incredibly slow at moving through these things. If you're a high frequency trader, they'll probably bring in an outside consultant to recalculate your gains. So that's a big factor. And generally, our experience is they generally calculate it poorly and come up with high amounts that you owe, in which case you have to appeal it or take it to tax court. And that will generally add another 2 years to the whole resolution process. So an audit can drag out for 3 to 4 years easily in most cases. Now, if you're lucky, it's resolved within 2 years. If not, it's 4 years. Now, what's painful about that is typically if you're married, it's stressful. It's stressful in you personally if you're the trader because you don't know what they're going to come after and they might demand a lot of money. If you're married, then the non-trading partner may be upset as well. They might be angry at you for having done this trading and they told you not to do it. And a lot of anger can come out, a lot of laying in bed, worrying, day in, day out, not sure if they're going to be destroyed by the IRS coming after, incredible amounts of additional tax money. And that fear drags on night after night for a couple years. And it's not unusual for people to have significant marital problems, even divorce, because an IRS audit has begun. So you need to have a coherent strategy.